Let's review how to use the accounting equation. In this example, we're going to use the expanded accounting equation, where assets are equal to liabilities plus owner's equity. When we look at owner's equity, we'll take the owner's capital plus revenue minus expense and minus the withdrawals. Let's start with transaction 1, an investment by owners. Ray and Barbara Neal decide to open a computer programming service. On September 1st, they invest $15,000 in cash in exchange for ownership in the company. When the owners invest cash, the cash account is increased by $15,000 and owner's capital is increased by $15,000. Transaction number 2. The company purchases equipment for cash. SoftBite purchases computer equipment for $7,000 cash. When the company does this, the cash account decreases by $7,000 and the equipment account increases by $7,000. Transaction 3. What happens when a company purchases supplies on credit? SoftBite purchases $1,600 from the Acme Supply Company computer paper and other supplies expected to last several months. When this happens, supplies increases by $1,600 and accounts payable increases by $1,600. Transaction 4. Services are provided for cash. SoftBite receives $1,200 of cash from customers for programming service it has provided. Cash will increase by $1,200 and revenue will increase by $1,200. Transaction 5. Purchase of advertising on credit. SoftBite receives a bill for $250 from the Daily News for advertising, but postpones payment until a later date. When this happens, the liabilities, or accounts payable, increases by $250 and expense will be a minus $250 because expenses decrease owner's equity. Transaction 6. Services are provided for cash and credit. SoftBite provides $3,500 of programming services for customers. The company receives cash of $1,500 from customers and it bills the balance of $2,000 on account. When this happens, the cash account increases by $1,500, accounts receivable increases by $2,000, and revenue increases by $3,500. Transaction 7. A payment of expenses. SoftBite pays the following expenses in cash for September. Store rent, $600. Salaries and wages of employees, $900. And utilities of $200. This transaction decreases the cash, $1,700, and is a decrease in the expenses of $1,700 because expenses decrease the owner's equity. Transaction 8. A payment of accounts payable. SoftBite pays its $250 Daily News bill in cash. This causes the cash account to decrease by $250 and the liabilities account to decrease by $250. Transaction 9. A receipt of cash on account. SoftBite receives $600 in cash from customers who had been billed for services in transaction 6. Because the customers were already billed, this transaction results in cash increasing by $600 and accounts receivable decreasing by $600. Transaction 10. Withdrawal. The owner withdraws $1,300 in cash. This results in cash decrease $1,300 and equity is affected by an owner's withdrawal by a decrease of $1,300. If we look at all of the transactions that we've just completed and we add up everything that happened in cash, everything that happened in accounts receivable, everything that happened in supplies, and everything that happened in equipment, we find that our assets are equal to $18,050. We then add the liabilities column and get $1,600, and we add each of the owner's equity columns to get total equity of $16,450. If we take our assets, $18,050 is equal to our liabilities plus equity, $18,050.